CNBC TV 18 special coverage here from the World Economic Forum's annual meeting in Davos. I'm Shireen Bhan, and we've been bringing you headliners, global business leaders to help understand what 2026 holds. What is the promise, the possibilities, the risks, and the challenges? Joining me now is someone that we have had the pleasure of interviewing on the channel for many years, but more importantly, for the last 3 years since he took over at Cognizant and put a turnaround plan in place. Ravi, thanks very much for joining us here on CNBC TV 18. It's great to have you back in Davos, and 3 years on the clock.
Yeah, thank you, Sharon. I've met you every year at Davos in the last 3 years, and we've spoken about progress. So thank you again for hosting me.
Well, so 3 years on, I want you to give us your report card.
So Shireen, if somebody said this is what I'm going to get at the end of 3 years, I would take it. I would say the first 3 years was about stabilization, and the next 3 years is actually going to be about bold bets. In the first 3 years, we climbed up the charts, and on relative scale, till the end of Q3, which we have publicly announced our earnings, we are on the upper quartile, top performance on relative scale. So I'm very happy with where we are, but looking forward to the next 3 years, which is going to be big bets and bold bets.
When you talk about big and bold bets, explain to me what those will mean in terms of investments, the kind of investments, and the size of investments as well.
Yeah. So Shireen, when you go back to the history of companies like ours, way back when we wrote custom software, bespoke software, we were called builders. We assembled everything for clients, and we translated that to enterprise transformation. Here we are, fast forward, with 2 generations of enterprise software, one with SaaS and one with on-prem software. We relegated our roles to a system integrator. Now with AI, we get to build bespoke agentic capital, so we can go back to being the builders, which means we have a much broader role and a much bigger addressable spend, because technology is intertwined with operations of companies. So not only are you addressing the technology needs, you're addressing the transformation needs of operations of enterprises. So I see this as a uniquely big opportunity. I kind of spoke about it. There are 2 swim lanes on which this opportunity falls into. The first is to take classical software, which we wrote for the last 2 or 3 decades, and write it in a different way. Write it alongside machines. And Cognizant ran this vibe coding event where we got all our employees, in fact 250,000 employees on a Guinness Book of Records, vibe coded concurrently. And that's the culture we are inculcating for writing software for the future in a very, very different way alongside machines. I believed in the paradox of doing more for less, and if you do more for less, you get to do more. The second swim lane is building agentic capital, which is very different to software development cycles. It is agentic development cycles. I call it software 2.0. And what you can do here is the art of the possibilities, because agentic capital, or writing software which can be assisted by machines, is software which you can write if you can verify it with humans. Versus software we wrote before, which was about software we wrote which was specified by humans. So it's the opportunity is much bigger, but equally we have to disrupt what we did before and do it differently.
Well, I'll come to what you're going to do differently in just a second, but speaking of big, bold bets, you did publicly state that you are looking at the possibility of a secondary listing or an IPO in India. Where have things progressed on that front? How close are we to an actual decision being taken?
So Shireen, we are working with the regulators in India. The last time something like this happened was many, many years ago, when Standard Chartered did this. Right now, we will be the first company who is attempting this, which means we have the burden of actually helping the regulator to work alongside us to get to the finishing line. So that's a journey we have to go through.
How close is the finishing line?
Look, regulators in India are very receptive for new instruments. This is an American listed company which has the opportunity to list in India as a secondary listing. That's what Indian companies did in the 90s. They actually listed primary in India, and then they went to the US.
Yes.
We think we have a pool of investors in India who are very keen to invest into tech services. Tech services is a proxy for AI. We also think there's a lot of mutual fund money which is being fed from the middle class of India, the vibrant middle class of India. We think we can capture that opportunity for Cognizant and get a new category of investors. it's going to be a journey to do this, but we'll give it a try.
And what are the questions the regulators are asking?
I mean, there are a variety of things because this is the first time we are doing it, but they are in a constant dialogue and we are iterating, and it's very constructive. So I'm very pleased with all the meetings we have done.
And do you think 2026 could be?
Hard to say. I mean, these are things which is very hard to say, but we're going to give it a try.
Okay.
We should do everything what our shareholders will get value from, and if we can attract new shareholders. Look, IT services is a bellwether industry in India. It has retail investors, it has mutual funds, it has index funds like pension funds in India which are invested. So it's a very attractive proposition.
Well, we'll see if 2026 is the year that the regulator gives you the green light, so to speak, for a secondary listing in India. But I want to go back again to the big bold bets theme that you laid out for us as you look at the next 3 years now. Acquisitions, that's been a big part. You've done a very big one with Belcan. What is the appetite that you have now for large deals, for large ticket acquisitions, large ticket M&A?
Shireen, I've always believed that M&A should be layered with organic growth. We've got our organic growth back. We've got it back with a relatively higher growth than the rest of the peers in the industry. So it's our opportunity to look for big bets, and the big bold bets could be on AI, building platforms. We're a platforms company. Way back in 2017, we bought TriZetto, and we translated that to being the #1 healthcare service provider in the market. So we have a culture of platforms, and we have a variety of other things which we could do. For example, our presence in Europe, our presence in Asia Pacific is lower than our peers in terms of percentage of revenue. So we could address that. We could address industry verticals. So there's a lot of things which we can do and integrate M&A to organic growth. I'm a big believer that organic growth has to be the foundation on which you do M&A. But right now, here we are. Now that we are getting into this phase where we believe we have the confidence. I mean, our attrition rates are on an all-time low. Our customer satisfaction scores are on a high. We are the only company in our peer group which actually audits percentage of code written by machines and assisted to humans, and we actually put it on our earnings. So we are excited about our large deals. We are excited about the ecosystem we are now operating in. So M&A is a good one to layer on. We are also investing into partnerships. We put up a partnership with Anthropic. We put up a partnership with Google. We put up a partnership with Microsoft. And we think as a builder, it's not just about lending a human capital. We want to own that value chain all the way from LLM access to compute to platforms to human capital, and give it as a bundle to our clients so that our clients actually buy services from us as a builder and draw from us, and we own the risk and the outcomes in a way. This is the first time in tech services we have the unique opportunity to price ourselves with outcomes versus pricing linearly with effort, and that's a big bold bet we want to take as well.
You talked about the fact that you're now verifying how much of the code is being done by machines or by AI. What does that number look like today, and what is that number potentially going to look like?
So at this point of time, 30% of our code is assisted by machines. That number can go all the way to more than 50%. And when that happens, more code is going to be written. I mean, that's the paradox of technology. It has the elasticity that you could actually do more. I mean, what's going to happen though is the capability you need is going to be very different. AI is like a quarterback. It's going to be in the middle. We're going to have jobs on the front, which are related to authentication, ideation, problem finding. And on the other end, you're going to see verification and validation jobs. So we are going to see a ton of jobs on both sides, with AI being in the middle, and that's why I call it a quarterback.
Well, it's very, very clear that you have now firmly switched to the US. There was no cricket analogy. You brought in a quarterback and a football analogy into the conversation. But Ravi, I know here in Davos you're going to be talking about what AI is going to mean as far as jobs are concerned, what it's going to mean as far as the workforce goes, and you're slightly more optimistic than many on that front.
Yeah, so the pivot on AI today has been to look for opportunities where it can displace human capital. That is a wrong thing. It's not going to take us far. The real pivot has to be about amplifying the potential of humans, and that's the real pivot. What's really going to happen is in the future, and that's what we hope we would do, is we take AI tooling and embed it into the workflows of companies, embed it into the process flows of companies, embed it into the rhythms of work. And when we do so, you're going to actually see more productivity. And if you see more productivity, it's going to be deflationary growth. And that's what the world is looking for. The world is looking for growth which can happen with increased wages, lower interest, and lower inflation. And it is in some ways an opportunity for us to do that. I mean, productivity has not gone through a bump for the last 15 to 20 years, in spite of technological advances. This is a unique opportunity to do so. I think we're going to see a significant number of jobs going away, but we're going to see a significant number of new jobs coming in. We did research at Cognizant. We did it in 23, and then we updated with a new version in 2026. And 93% of the jobs will have some connection to AI embrace. But what we have actually been fascinated about is the velocity of change from 23 to 26. 50% exposure, almost 60% of the jobs have more than 25% exposure, and 30% of the jobs have more than 50% exposure to AI. So the point is, if you can pivot this in the right direction, you can translate this to digital labor, which can integrate with human labor, and the human labor uses digital labor to amplify themselves. We're going to live in a very different world.